Hello, in this presentation we will create an invoice populated by a billable expense. In other words, we entered an expense for inventory in the past and we'll link that to the invoice we create at this time within QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. Here we are at the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem. We will be entering an invoice and populating that invoice from a check that was written in the past and a purchase order that was created in the past, which we wrote the check for. So let's go through the scenario of what is going on real quick, and then we will enter the invoice. We're going to select this item, this drop down up at the top, in order to go through this process. What we're imagining to have happened here is that we had a customer come into the store, wanted a particular guitar, that guitar a different color or some type of customization for it. Therefore, we went to our vendor asking for a particular guitar, not just for our store, but for that particular vendor, and we had a purchase order in order to do that. Remember that purchase order does not have a journal entry related to it. It's just a request. We haven't paid for it yet, and we haven't received the guitar. But on that purchase order, we did include that it was for a particular customer. Then when we got the guitar, we made a payment for it, and when we made the payment for the guitar, we still populated that payment through the purchase order and applied the fact that it was for this particular customer. Now we're going to go through and go to the customer here and create the invoice, which will be linked to the check we wrote following the process of that guitar being given to us, and it will be populated through the original purchase order, which was then followed up by the check. The same process could be followed with the bill. In order to do that, we got to make sure that the check has the billable option available to it. So we could go to the invoice here. We can also go to the invoice over here on the sales area. That's what I'm going to do. So I'm going to select these sales on the side, and then we're going to go to new. So we want a new invoice. So we will select new invoice. And the invoice is going to be related to a customer named Eric Music. So we're going to select the drop down, and we could type in Eric Music and it will auto populate. Selecting Eric Music and tab, we get this pop-up over here saying, hey, there's a billable expense there for $400. If we open that, then do you want to leave this? I'm going to go ahead and leave this for now. We see the information for the billable expense. So mark as a billable expense. Here's the actual check. Here's the Eric Music, the description, and the amount. If I click on the check here up top, that'll finally take us to the actual check. So here's the check we entered, and it was for $400. If we scroll back down, we see it was for the Epiphone. We said it was billable, and it was for Eric Music. If this isn't set up, you can go and find the check in the check register or back through the detail in your cache and set up this billable item, and then it should link as we want it to. Note that this will be an imperfect method because when it pulls over, it's not going to pull over the sales price. It'll pull over this cost, which is the cost, and we'll have to make an adjustment. But it will show us a link, and it'll tie this thing out so we can see that this item will pull over automatically. So we'll see that as we go. We're going to close this back out. We're going to go back to the sales item on the left side, and then we're going to go to new invoice once again, and we'll type in Eric Music once again. Eric Music, there we go. So we're going to say then that's going to be that billable item. We're going to say, yeah, add that, please. Please add that. And when we do so, the balance changes, and we can scroll down, and there is the invoice that we have. So note that this method is not perfect, however, because it's pulling over the cost, the $400, rather than the sales price, which we don't even know because we can't see it on this form. So this method doesn't link it so that we can see this information and link through the whole process, meaning the purchase order to the payment that we made to the invoice, and have it all linked up. However, it's pulling over the cost, and we need to change that to the market price that we're selling it for, not what we bought it for, in other words. So as this changes, if there's any updates, we'll take a look at that, and we'll fix the link and see if we can link this out a different way. The on-ground version, of course, kind of links this out a little bit differently. So in order to fix this, the workaround for this, the easy kind of way to fix this is say, okay, it's linked up, we owe this amount, and that links up the bill. We just want to change the rate. And how do I know what the rate will be? Well, I'm just going to make another line item, and then I'm going to delete it. So I'm going to say, here's an ELP, another ELP, same item that we have up top. The sales price is $500. And so I'm just going to change this rate then to $500. And that's the rate we want to have. And then if we tab through, we have that. And then I'm just going to go ahead and delete this item. We don't really want it. We just wanted to see the rate. So that's one way we kind of link everything in and have this, rather than typing in this information, you can have it pull in automatically through that process. The rest of this process is going to be much the same, so as other invoices, but invoices are complex transactions, so let's go through this. We've got the invoice up here. What that means is, of course, we're going to increase the accounts receivable. So accounts receivable is going to go up. The other side typically will be some kind of revenue account or income account. We're going to call it sales because we're selling guitars in this case. And then there's going to be the inventory that's going down. The inventory is going to be going down not by the amount here that we had, the 500, but by the prior amount, the 400, what we bought it for. And there's a related cost of goods sold. So we'll see those items when we take a look at the financials. We're going to tab through this. We're not going to put anything in the email. Then we have the billing address. The billing address is important because we have to have it so that QuickBooks can calculate the sales tax. Sales tax is going to be different by region. It's different by what we sell. And in this case, we have to have sales tax for where we are because we sell a guitar. We're not going to charge sales tax for service items. The sales tax concept itself is pretty basic. Once we know what is taxable, we just apply the rate. And I'm going to try to apply a 5% rate, even though QuickBooks is going to try to apply the rate for any location, just to have a kind of a problem that will work anywhere. So in order to do that, you do need to have it calculate something. So you got to put the place that the taxable entity in. You can check a prior presentation for that. We're going to put an address, the billable address, and we need an address for our company so that QuickBooks can calculate something. If we don't do that, QuickBooks won't calculate anything, and you can't even just put something in there for an example problem. So you got to set those up, and then we can then change it if we want to. So we need the billable address to have that information populate. The date's going to be 01/25/21. We will be working in the future. The due date then a month later. And we're not going to have a shipping address. And then, of course, this populated by itself, but we had to change that. So if you are linking it, you have to change it. If I was to enter this in just from scratch, it would then put the sales price, not the purchase price, and that would be what we want on the invoice. Because the invoice should be saying two things here. It's gonna tell us the sales price, which is going to increase in this case of receivables and sales, and the other, which we can't see but it's still recording, is the cost, which is going to record the reduction in inventory and the related cost of goods sold. Then we have the sales tax. Now the sales tax is calculated based on the information we put in for the sales tax. Again, I just want a flat rate. So what we're going to do is adjust it, which we can do now that it's been calculated. I'm going to say 500 times 0.05, 5%. And we're just going to take a flat 25. So we're going to change that sales tax. We're just going to change it to 25 to have kind of a more simplified problem. QuickBooks is going to say, hey, that's not what we calculated. Did we do something wrong? And we're going to say, no, you did everything right, but this is a practice problem, and we want to keep it standardized. So once again, the concept of sales tax will be the same. We just want to keep a standard rate. Once you know the rate for wherever you're at, then you can apply that rate, and you can use the auto apply that QuickBooks now has, which could be very useful, especially at different locations. Could be very nice. It is very nice, actually. So, all right. So then we're going to go through this, and let's just analyze what we have here. What's the transaction going to look like? Well, it is an invoice, so accounts receivable is going to go up. It's going to go up by the sales price, which is sales price plus the tax, which is $525. The other side of that is going to be sales. It's going to go up not by the $525, but by $500. The difference is $25. That's the sales tax. We don't get to keep it. We owe it back, and therefore it's going to go into a liability, which will be sales tax payable. We also have a decrease in inventory. Inventory is going down, and it's an asset, so it's going to decrease. It's going down by this guitar, but not by 500, the sales price, but by 400. an amount known by QuickBooks, not seen by us anymore because we changed this to the rate. And therefore, it's going to decrease it by that. We'll see that in the forms. And then the other side is going to be cost of goods sold. So we're going to increase in terms of the income statement, net income, by 500 and decrease by the cost, which we saw was 400. Net increase is 100. Let's see if that is the case. We're going to save this. Take a look at the forms. So we'll save that. I'm going to say, yep, I want to save that. Close this out. We're then going to go back to the reports left side. We're going to go to reports and we're going to take a look at the balance sheet first. Balance sheet. We'll change the dates up top. We're going to go from 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. Run that report. Then typically I look at the receivable first. We made an invoice, so what happened to the receivable? Let's take a look. Go into the receivable here. There's Eric Music, there's our information, increase in the receivable by the 525. If we click on the 525 and scroll down, we see the 525 here. So that's the total that it's going up by. The other side's going to be sales. So let's go take a look at sales, which is on the income statement, or profit and loss as is called by QuickBooks. We're going to go to the reports over here. We'll type in profit and loss. And we'll change the dates once again from 01/01/21 to 01/31/21, and that is January 1st, 2021 to January 31st, 2021. Run that report. Then we had a sale, we had a service sale, so it should be up top right there. So we're going to select that item. And we have the sales item for 500, not 525. If we select that, we see the same invoice, but we only have the 500, not the 525. The 525, the difference is going to be into a payable, a liability account. Let's check that out. We're going to close this back out. We're going to go back to reports and back to the balance sheet. So we're going to go to the balance sheet. We're getting good at entering the dates here. Balance sheet. We're going to change the dates once again from 01/01/21 to 01/31/21 and January 1st, 2021 to January 31st, 2021. Run it. Then we're going to go to the liabilities. Assets and then liabilities are going to be down here. We see the liability to the California State Board of Equalization. That's because that's who we pay the sales tax to. Instead of just saying sales tax payable, we actually are naming the board here. It's going to change, of course, by our location. If we select that item, then we see this information. It's breaking it out. So these three should add up to the total of 25. If we click on it, then we see the same 25 there. There is that. We're going to close that out. Now there's going to be the other side, the inventory going down, and its related cost of goods sold on the profit and loss. Let's check that out. Going back to the report summary, back to the balance sheet. The other side is inventory going down. If we go up to inventory, we see inventory up top. There is inventory. If we select the inventory, then we scroll down, we see that it is going down by the 400. So here is the 400 decrease in inventory. If we select that item, then we see our invoice once again. We're going to close that back out. And we're going to select the last piece, which will be the cost of goods sold. For that, we're going to go back to the reports on the left-hand side. We're going to scroll back down. We're going to go to the profit and loss report. We will change the dates. Dates going from 01/01/21 to 01/31/21, January 1st, 2021 to January 31st, 2021. Run that report. We then have the cost of goods sold. That is an expense item increasing, which would decrease the total net income. Selecting that cost of goods sold, we see that we have the 100 here, the 400. And once again, if we select the 400, we don't see the 400 on this form. We only see the 500. The 400 is being driven by this item here. So even that we changed that, remember, to 400 to 500, because it was recording the cost or the expense, and we needed to put the sales price. So note that it's still putting the 400 like it should in the cost of goods sold. And in the inventory we just saw. If we close this back out and go back to the report, So that's going to be our information. It went up by 500, and the sales went up by 400. Cost of goods sold, net increase, net income 100. Then, and if we want to see that 400, then we can go to the sales on the left-hand side. We want to go to products and services up top. We're looking for the Epiphone, and there's the cost that we sold it for, 500. I mean, there's the sales price, 500. Here's what we bought it for, the 400.